Welcome back. Our next guest says that the economic effects of the new Trump administration in Washington will take time to fully understand and play out. For his outlook on the markets, let's bring in Thomas Martin, Senior Portfolio Manager at Globalt Investments. He joins us from New York. Thomas, thanks as always for joining us. It's always good to touch base with you. As we just noted, U.S. stock indices are off to a pretty red-hot start so far in 2025. What's your outlook on, let's say, the S&P 500 for this full year? If I understand my notes correctly, you expect a gain in line with long-term averages, and that would suggest a moderation of the pace of gains so far this year.
Well, it would. Off to a 4% start is pretty good, and the market is more diversified in what's working this year than it was last year. The equal-weighted S&P is up almost exactly the same as the cap-weighted, and mid-cap growth and mid-cap value are doing very well also. This year we expect that there's really a wide range of potential outcomes, but by and large we're hoping and expecting that it will come together for an up year that could be in line with the long-term averages, if not in excess of that. Certainly, the expectations for earnings growth this year are still in the 14.5 to 15% area, and analysts have started to bring out their crayons and see what they think is going to happen in 26, which is another 13.5 to 14% earnings growth. So as long as we don't get a hit to valuation of significance, we could see in excess of that long-term 10% rate of return.
The new Trump administration is surely one of the big themes on investors' minds so far. In my previous interview with our earlier guest, we talked about the flood of executive orders, many of them taking the direction of ordering U.S. agencies to relax or eliminate certain regulations. How long will it take us to understand the economic consequences of this big thrust of the Trump administration?
Well, it's going to come out, over time, and we would expect that it's going to be at least mid-year, if not a full year, before you get, real meaningful changes that are happening, and you can see what's actually happening. I mean, right now, there's still a lot of back and forth, just taking tariffs for an example. I mean, first it was going to be day one, then we were just going to take a look at things and study them, and now it may be February, and, who knows what it'll be tomorrow. I think that the president likes to keep his options open and be fluid with what he can do with the information that he puts out there. So that's going to take a while just to be implemented, but regulatory moves always take a while to take effect. And of course, the people and companies that are being regulated don't stand still. They take their countermeasures, et cetera. So it's going to be an unfolding work in progress.
Okay, with all of that in the background, you've got a short list of stocks that you like. One of them is Spotify, the music streaming giant.
Right. So what we're looking for in companies this year is companies that will be able to grow their revenues, usually as a result of an expanding addressable market, and to be able to increase their margins along the way, increase penetration, increase pricing. Spotify is an example of that. They're a pure play on music discovery and listening. They have about a third of the market. They have a highly competitive position. They're building their moat, even relative to some big players like Apple and YouTube. And the price that consumers are paying for what they get in terms of entertainment value in music is still a good bargain relative to, streaming of movies and other entertainment types of options. So we think that there's a lot of ways that they can increase their earnings going forward and keep their growth rate up.
Okay, another one is Royal Caribbean, the cruise line operator. This sector has received a lot of attention really ever since the pandemic, when business vanished, and then the big question became how soon would the market come back for the cruise operators and when it would do so. What's your take on Royal Caribbean? The stock has doubled over the past year or so, and just like the S&P 500, is off to a 3% plus gain so far this year.
Right. So Royal Caribbean, like the other cruise companies, people wondered if people were ever going to do that again, and how much they were going to do. And that put a bit of a damper on supply growth for a while. It's starting to grow again, but it is growing less fast than demand. And the cruise companies, Royal Caribbean included, are offering more amenities, more things for their customers to do, private excursions, private islands, again, really trying to make for value for the money. And Royal has been able to increase their return on capital from just beyond the pandemic, around 10% to around 15% now. So again, they're able to increase their penetration, have room to increase pricing, and to better their margins. And people love it. People find it to be a good entertainment value.
Okay, and the last stock you like has also doubled over the past year or so. It's part of that quality pet food movement that we see a lot of on television. Those of us who own pets notice that Freshpet, ticker symbol FRPT.
Yes, so this is one of my favorites just because there's, again, a lot of levers that they can pull. First of all, they're the leader in the fresh dog food business. Now, the dog food business is about a $37 billion business. That is about 6 times what quantum computing is, just for reference. Maybe it'll grow a little bit slower in the out years, but it's still a pretty big business. And Freshpet only has about 3 to 4% of the overall business, but they have closer to 90% of the fresh business. It takes a fair amount of management expertise and manufacturing expertise, distribution in terms of refrigeration and refrigeration within the stores. So they have a big advantage there. And they're also really just starting to penetrate their distribution channels. They're well penetrated in grocery, but still have room to go in more mass and club markets, and particularly in e-commerce, et cetera. And customers, the pet owners, although they may be knowing about Freshpet, are also underpenetrated. So the number of customers that can try it and like it is improving. And as they try it, they improve, they increase their share of wallet that they're spending. They may start out with a bunch of dry dog food and ease in on the fresh pet, but before you know it, the pets are demanding more and the owners are giving in.
Would you consider this a consumer discretionary or a staple?
If you ask a pet owner, I'm sure they would call it a staple.
Okay. Thanks very much.
It falls in the staples category, so it's one of my favorites.
There you go. Thomas Martin, thanks for a good conversation, Thomas. He's Senior Portfolio Manager at Globalt Investments. He joined